Everybody, this is Jim at SP500chart.com. It is Sunday afternoon, almost 1:30. We're going to take a look at this last very tumultuous week in the markets. And before we do so, let me remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Dare we take a look? Yes, let's look at it. We're going to take first a look at long-term charts to see what's happened. Here's where we were at our all-time highs just 3 weeks ago, a little bit more than 3 weeks ago. Then the coronavirus scare hits, and it all hits the fan, and we have what is an historically horrendous 2 weeks, a little bit more than 2 weeks. This is a 7-day chart. I just used that because that way I can get everything in here that I need to. Now that you've seen that, let's go to a weekly. So each one of these candles is a week. So 3 weeks ago, we had a huge down week. The week between that, we sort of stabilized a bit in our little red danger zone there. That relates to this inverted head and shoulders pattern, and where we say that pattern has failed. It has failed. And then last week, we put in this very long candle right here. We'll zoom in on it. There it is. That was that's the week, rather. That was a week in which we saw 28.79 is the high and 24.84. We had about a 400-point swing range in that week, which where we opened the week, that would be about 13-14% up and down. We closed at 27.12. Interestingly, we closed exactly on this light gray line, which if you'll remember, that was the line that we had drawn back here underneath this right shoulder way back when. The other thing that's kind of interesting, and we're going to take a look. I'll tell you what. Before I get into the details, let's take a look at the Dow Jones and Nasdaq real quick. I don't want to get ahead of myself here. I said I was going to do that, so we'll do it. Here we are. This is our Nasdaq here, and you can see, again, this is a weekly chart. I think I need to adjust that line just a little bit. Tell you what, let's do this. I'm just going to use the last two bottoms of inverted head and shoulders patterns, because those are the last two specifically important areas of support. Very interesting to see that. I think I talked about this midweek just a little bit, but now that we're here and I've sort of redrawn this line a tad, look at that. Pretty much looks like it's found some support on that line. Does that mean we go straight up from here? No, nobody can say that. So I'm not going to be doing it. Then finally, our Dow Jones, again, sort of a similar thing. We had a blue line that goes back to our last two significant lows here. Well, actually, this is a little different. Our other charts use this low and this one. But the Dow, if we, that's an inverted head and shoulders pattern. That's an inverted head and shoulders pattern. And according to the Dow, this inverted head and shoulders pattern never came down to support unless, I want to use a different line that ignores the lows of 2011. Take your choice there. At least the Dow closed over this trend line. Now let's look at the S&P again. And by the way, I'm kind of struggling with something right now. And what I'm struggling with is the coronavirus just another event that freaks the markets out and then the markets actually recover? I don't know the answer to that. It could be. The reason I say it is this: tops usually don't form where something bad has happened. Tops usually form where everything is good. That's usually when you get a top. When something bad happens, it forces people out of the markets, or it forces people, to make investment decisions. But I don't think it necessarily is the psychology of a top. We'll have to wait and see. The reason I say that is, from what I saw this past week, and we're going to take a much more specific look here at the S&P. From what I saw last week, I want to hold out, and so certainly we do not have a confirmed top. Okay, that's unquestionable. But I want to sort of hold out on the idea that we are necessarily making a significant top. I thought we were on Thursday, but when I saw what happened to the markets on Friday and where we regained some position that we had lost on Thursday, just sort of gave me pause. I was not expecting almost a 10% turnaround on Friday. And of course, this week will certainly color any outlook that I might have that says we could be salvageable. The interesting thing, couple of interesting things. You remember we were in this descending channel here, and then we went sideways, and then all just broke loose. Look at this line right there. That was the line of resistance that we broke out over, and you can't make this up. We actually back-tested that line. I thought there was no way you'd ever backtest that line, because I was thinking to myself, that thing is going down at such a pitch. You'd have to see 10% losses in a day to get down to that line. Well, that's what we had, and we did. It looks like too, I can zoom in on a 15-minute chart here. We still see everything. And everything from the 5th on has been in a descending megaphone, a descending broadening pattern. And what is that indicative of? That is indicative of what we know happened over the past couple of weeks, and that is people absolutely and completely uncontrollably freaking out. We closed at the highs of the week. We closed at the highs of the day last Friday, and with that, it should be pointed out that we closed right at the upper resistance line of that descending broadening pattern, and we also closed right at where one would expect some potential gap resistance from that gap down on Thursday morning. So that gap has been closed. That means we could start the week off with some selling pressure. But still, we draw lines because they help us sort of with some predictive quality, but they also are diagnostic. If we were to gap up over this line, or if we were to get over this line at some point on Monday, then you start to think in terms of this was a bottom. If you look at it, it sort of almost looks like a triple bottom. It's got ragged tops. And if you look at it in another way, and you sort of maybe don't get too taken up with those little tops there, if we look at it in a little bit more detail, it almost looks like one of our familiar friends, sort of an inverted head and shoulders pattern. You see that the 2-day line of resistance on the chart that was put on there on Thursday. Well, actually, it was there on Wednesday across these two little tops here. But I refined that line just a little bit at the open on Friday. Then we got over it just past midday, back tested it again, and then that's when I believe probably what happened at the end of the day was, and I know people say that Trump said something that the markets like. That's great, but really, I think more than anything else, shorts, having had such a historically good week this past week, I don't think there was any way they were going to take their positions into the weekend. So we had a lot of short covering, which, by the way, I know a lot of people say, well, that wasn't a real rally, that was short covering. Short covering is a real rally. Don't mistake that. Buying is buying. It doesn't matter whether you're buying to hold, in hopes that it goes up, or whether you're buying to cover a short position. Buying is buying. And that's where we put on the brakes. Right there at where you would expect gap resistance, and also right there at the resistance line, descending resistance line of that descending broadening pattern. Because we spent a couple days down here, it sure would be nice to feel that this has provided at least some kind of short-term base. We'll have to see how things work out. Folks, this market's going to be choppy for a while. You can't introduce this kind of, I'll just call it insanity. You can't introduce this kind of activity into the markets and expect it to suddenly calm down. It's going to be choppy for a while. Finally, I just want to say something about the virus. Hey, folks, don't go at it if you don't have to. I personally don't think this is nearly as serious as a lot of the people who sell news for a living are making it out to be. But let's not play around with this. Don't go out unless you have to. Keep an eye on your health. Just do those things that are good hygiene, and try to stay out of trouble that way. So look, there is your weekly review. Again, it looks like we should start the week down. But if we start it up, who knows? I mean, that would be tremendous. That would certainly, here I'm taking a chance because it's only 1:30 now. Futures will open in about 4.5 hours, and then I guess the fun begins. Oh, finally, just one more thing. We also had this descending trend line here. I thought that would hold, but on Thursday that broke. We also, we also closed above that line. So a sign of strength, a sign of potential weakness, and another sign of potential weakness. Who knows? I apologize. I wish I could have seen all this coming, but no chart will predict the news. So I hope you're okay with understanding that. So thanks for taking time out of your day to watch this. If you're a subscriber, thanks for your support. And by all means, take care of yourself over this next week. Thanks for watching. Take care.